Welcome back. I'm Damian White, my associate Tim Murphy, and this is the Gold Spot. Okay, so let's start it off. We've got some pretty exciting price action in gold, especially here over the course of the last several weeks over March. Seems to be breaking out to new all-time highs. We've also got the federal government approving a $1.2 trillion budget just recently. Can you expand a little bit, Tim, on what the price action of gold is doing, and what you expect things to transpire going forward here with this money that this government seems to be spending relentlessly?
Yeah, Damien, I think gold, it's reflecting what the debt's doing. Our national debt is going through the roof. It's rising exponentially. It's every 100 days we're looking at $1 trillion more in the debt. And it has to keep rising at a faster rate over time. Otherwise, the economy is going to implode. So we've got a real serious problem. And I think the world sees this, especially the BRICS countries, which are tired of being abused by the U.S. and who's weaponizing the dollar against them and against Russia as well. So the BRICS they're going to get together later this year in Russia. We're going to see more movement towards getting away from the U.S. dollar, international trade. It's snowballing, and there's no turning back. So the only thing left now is for silver to follow along lines with gold, and it will, because silver's been at a sideways price now for 4 years. People they're bored with silver. They don't want to buy silver because it's not moving. But that's when you want to buy silver, when it's not moving, when people are looking the other way. The supply-demand situation is so bullish in silver and gold that it's going to take prices higher. And again, led by central bank buying of gold especially. All the inventories that are being deleted on the New York and London exchanges. It's all happening. It's all going to happen. We're going to have higher prices, and there's no way around it. And the amazing thing on top of all this, Damien, is that people are not excited about gold when it's making new highs. It's exciting. We're going to 2,500 next stop and then much higher. So how do you explain the public not being more excited?
Yeah, absolutely. We are seeing pretty low sentiment, and I think general overall ownership among not only retail but institutional money is very lightly owned right now. And it seems like at a certain point, clientele basis of institutional money is going to want them. If you have an asset that's printing new all-time highs, never before seen highs, and you're not owning it, you're going to start seeing some demand, I think, from their client base as well. And of course, there's other aspects coming into play here. We've got geopolitical instability. There's been some additional things going on in Russia. The upcoming U.S. election, I think, might add a little bit of fireworks to what we're going to be seeing here in the upcoming months. So catch us next time and get along for the ride.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube or our Rumble channels. Also, comment below if you have any questions or if you want to hear us talk about something specific in a future video.